presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome there. If we can get the engineers to close the door, we'll be good to go. Anyway, we've got another wonderful day down here at the headquarters of Technical Trading and Investing, TFNN.com. It is another gorgeous sunny day in the low 80s. Sun's out and the surf's hitting the beach. So I can't really complain about anything. Wonderful drive across the causeway. Always neat to watch the surf on both sides as you drive down. And it's a nice sunny day down here. It's certainly summer finally has come to Florida, and I suspect probably coming to the northern states very soon, although they've had some fairly bad weather, especially in the Midwest with tornadoes. So I'm trying to actually get something going here. But I had a few technical difficulties with a couple of these things. Hopefully we got it right now. Hey, come on, Mr. Internet. Nope, don't understand what's wrong here. Maybe we'll get another one out here. See if I have to sign out and sign back in. Sorry about the delay here, but seems somewhat problematic here. I'm not exactly sure why I'm having issues, but we'll try here to re-sign in and get everything going. VR. Well, I don't know what our problems are with the internet today, at least on my quote system, so I'll have to worry about that later. But we'll go and look and see what we have elsewhere in this. So what do we have? At least the futures are flat out here. Market was up slightly in the morning. We were up about 5 S&P points. Not too different than the action we had in silver and actually in gold overnight. Silver, last I looked at like 10 o'clock last night, was down about 10%. It's now up, I don't know, a quarter, 26 cents or something. So we had a nice, I think I saw quotes down in the $21 level area. But nice rebound, especially in these. I was looking for some kind of washout. We're going to look at a few stocks out here in this area. But you can certainly see ProShares Ultra Short Silver getting up to a previous gap that has existed for some time in this market. Let's go back and look and find out where it is. Let's see. One we're looking at here goes back, goes back to, what is that? 9/30 of 2011. Is that right? We'll go back here and look at it. Yeah, 9/27 of 2011, so September 27th. So we've been back in there and kind of weak for a while. Let's go back and look just a little closer here at these levels. But got a fairly decent reversal signal out here up at the top for ProShares Silvers. I think we started talking about it last Thursday or Wednesday, that you almost always want to give these things a 3 Mississippi and wait for the worst of it. And apparently this happened overnight, so it would have been a little difficult to go after this, but certainly looked like gold was going to fail. Our markets were going to break out, but we're continuing to see kind of a flat or flat-ish market. We've got the Dow off 22 points, and let's see, what if I have a NASDAQ quote out here? Yeah, off 8 on the NASDAQ futures right as we speak. I'll try to get my instant quote system up during the break, but some reason it's acting a little funky like everything is today. what do we have going on in the news? Probably the most interesting thing to me is tomorrow we're going to have an election for, is it, not Merrill, it is, oh, I'm having problems today, aren't I? Jamie Dimon. And see if we have a J.P. Morgan. Okay, I just wanted to make sure that I wasn't saying something else. He is the, but he is also the chairman of the board and the CEO of J.P. Morgan. And of course, he was rather vocal last summer, going into last fall, about congressmen leaning on him for some money and contributions. He basically told them to go stuff it. And since then, they've pretty much been after him. Tomorrow's election, I suspect, will go his way. He will remain to be the CEO and chairman of the board. No one will be able to tell him what to do. He'll stuff the board and people that want to do things his way. And to tell you the truth, probably the right thing to do for this particular company. There are some companies probably that it would not be right for, but a lot of this is politically motivated payback. Goes back to Dodd-Frank when a lot of in the kind of the midst of the turmoil after financing debacle of 2008 and 9 and the ensuing damage it did to the economy. Basically Goldman Sachs put a huge bet against it. J.P. Morgan really didn't lose that much money. They were probably second on the best of the list of not going out there and really losing a lot of money. Of course, I think that was because they were selling these dog loans to other people, but at least they got out of it. And as the CEO, you're charged with doing the right thing as long as it's not criminal. I never saw any criminal charges put up on any of these folks. So, what can you say? Anyway, he was, 57 years old, something like that. But he will be here in Tampa tomorrow. I suspect that we'll probably see a little pop out of J.P. Morgan on that. If we are surprised and he is taken away the chairmanship, I suspect that he will resign almost immediately and become the CEO/chairman of another big firm on Wall Street within a few days. He's already said that he will quit, and I think a lot of people would probably like to have him. And again, I think most people understand that just how politically charged some of his statements were, and they were more than willing to give them a payback. Not much different than the IRS targeting you. In this case, it was a lot of the chairmanships that wanted a lot of cash from Wall Street, and he extended his middle finger to them. He is not very much appreciated anymore in political circles, and I think a lot of what we've seen here is politically motivated. Other things that we saw out here is SAP. Looks like this is going to get extremely ugly, and the Justice Department is coming after the existing CEO. They've basically said, you can get your money out of this company for a little while longer, but it is going to be problematic after, I think, late June or July, when it looks like charges will be filed against SAP and the current CEO. They're saying that they won't be able to give much, if any, guidance or statements, and certainly not say anything about the legal case going forward. So a lot of semi-legal and political intrigue entering the market. Of course, we've got basically the news covered with a lot of political scandal at the moment. I think that normally the one thing that is very good for the market is a gridlocked Congress, and I think most of these scandals should, for a while, suck up a lot of the oxygen and make at least the bullish case much better. Markets tend to like gridlock in the markets because they don't see a lot of things coming out of left field. Normally there's a lot of good Anyway, there are not a lot of things coming out of left field. When there is gridlock, it takes basically a fairly decent consensus to get anything going, and markets normally like that. They hate surprises, and most of the time with gridlock, you don't get that. Trying to think of other things in the market while I'm trying to get my system up here. Maybe we'll try it one more time and see whether it's come back yet. Let's see if we got it here. I don't know why this thing would it's decided to bail on me today. Maybe we'll hopefully this will come back in a little bit. Maybe in the meantime we should just go right to charts, since that part of the internet is working fine with the art of timing the trade charts. Anyway, we looked at CSL. Pretty good indication that we got kind of a reversal and a false breakout for that side today. The VXX, which is the VIX futures, this thing is bouncing along. I think we had a phone call a week ago now, and I thought that this is not a, I mean, when you really look in a lot of these VIX level setups, not too bad. Let's see what else we have here. Yeah. Now, on stocks testing previous highs on lighter volume, we certainly had that with TRW, the automotive manufacturing giant. The last high on this thing was February 15th, 2013, 2.1 million shares. Got into it and went above it on Friday with under 1 million shares, and pulling back a little bit out here. So some of these that have been making some rather large patterns looking a little better. Another one we've been talking on the show last few days was SanDisk, and that is breaking highs with lighter volume, pulled back into that trading range today. SNDK, 5.4 million shares, and what do we have there? Yeah, 58.92. So we got to 96.96. So yeah, about a good buck and change above the previous high. Pulled back into it on that lighter volume. SLW, we'll talk about Silver Wheaton in a second, but it looks like some of these are starting to come back in this, and we had a lighter volume out here, so at least when we look at the charts, maybe we're getting ready to have a bottom in gold. A few people stepping in down here, and of course we did have a very light volume on Friday. We'll be back in just a second.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back here, we've got Barrick Gold that we're looking at today, one of the stronger gold companies out here. Did not test its previous low. I guess you could make a case that it actually did on April 23rd test the April 17th low on lighter volume and kind of move back, pull back into that candle, and one of the stronger ones out here. It is up. Unfortunately, it is on lighter volume so far today. Other stocks we have on the move, Red Hat, RHT, on a downgrade. It's off about almost 4%, but fairly decent retracement candle. Volume is right back down to where support is around that high 52s level. We're going to have to watch and see how this thing closes out. But normally when they say back to neutral, there's something else going on in the marketplace. VMware is another one. VMW. We're looking at this one. I'm not going to say it's moving. Of course, we don't have a market moving that strongly already. But the S&P is just off like 2 points. Not much going on just yet. But VMware, volume inconclusive. Let's put it that way. It's just around a level that has been fairly tough resistance for a while. So what else do we have going on out here? I want to look at a few other V's. Facebook is continuing under pressure here. Take a look at that for a little while. And it's Facebook looks like it's coming back down into this high 24s and low 25s area. Probably has going to drop into there tomorrow, I would imagine. You're going to need some decent volume out here in the 50 million area to break this gap out, but not a bad looking consolidation out here. What you really want to see if you are bearish out here, this thing picking up. And of course, we talked a little bit about it on the Tom O'Brien show on Friday night, but the idea is that there's that Facebook was a fad with teenagers and they're spending less and less time. Also that since Facebook is being used a lot more on mobile devices, it isn't the kind of thing where someone sits down and uses it for 3 hours just steady updating their Facebook information left and right. So as we see this, not much going on out here. I wanted to look at Royal Gold real quick. Another one of these, not looking too bad out here. Of course, you don't want to see a whole lot of interest the first few days when these bottom out. April 18th is the low on Royal Gold, $50.20, 2.1 million shares. This thing ducked under. Yeah, are you going to get a close above that today, though? Yeah, I suspect we'll have to see. But you want to close above $50.20 at the end of this day, and you'd have a nice little buy signal when this thing is popped back in. You'd probably be looking at about $56 as a first target. What you don't like is the lighter volume that's tested that $57 range on the last time. Of course, it never really got too much back into this gap, which is going to be $57.50, $57.25, something like that, and extend all the way up to about $61. And, of course, heavy volume at that point. So a trade on that is going to be 10%, maybe something like that. We have a Panera Bread up here and trying to break out here today. That's right. Yeah, it is. And we've got light volume again so far. So this thing's trying to move up. We want to be watching this one very closely for signs of a false breakout. Panera's symbol is PRNA. PNRA. But we had that April 15th 1 million share high at 187.67, and so far today 286,000 shares, which is of course considerably light. GLW, which is Corning, this thing has taken off and just hasn't stopped. But we'll have to take a look at it. We do have a caller, and it is Roger in Mount Vernon, Washington. How you doing today, Roger?
Hey, pretty good, Dave. How about yourself? Did you have a good weekend?
Yep, I certainly did. Anyway, what are you calling about today? Are we talking about Tableau Systems?
Yeah, DATA.
Yeah, DATA, data. And, of course, unfortunately, my systems are kind of down at the moment. Let me see if I can't pull up something else here. Yeah, okay, up $5 today. Got up to $59.60. So what are you thinking about this thing?
I'm not sure. That's why I'm calling you. I don't know. It's fairly new, and it took a big bump up. So,
yeah. We talked a little bit about it on Friday, but if you'll hold through the break, I'll let you know what's going on with this. And it's a good company. What we have to worry about is some other issues. We'll be back in just a second.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we were talking with Roger in Mount Vernon, Washington, about Data, which is Tableau software. It's a data visualization company. It went public. This thing rocketed up on Friday. It's up another $5-6 today. What we do know about this company is that it's a real company, going to make real money. Is it worth what this huge bump we saw on Friday? And this is probably the real answer. 45 million shares. There's only 5 million available in the float now. It is unclear, or at least muddy, depending on what you are looking at, on whether or not the actual documents for the IPO are the ones that I was looking at. But it certainly looks like that there is a 6-month lockup period, and after 6 months, you've got another 40 million shares coming that would totally be unlocked, except for the requirements of CEOs and that kind of stuff. They actually have to file and all that stuff. So what you have is somebody that had 45 shares. They set out 5 shares and let a bunch of people fight over it for the first couple of days. And you got 40 more shares coming in 6 months. So if we just look at this as a musical chair game, I think we see why there were a lot of people forcing and trying to get in this thing fairly early on. It is a good company. Is this going to be the high price, or maybe tomorrow? Could be a good question out there. But this is very much like 2000 in the dot-com boom, where a lot of these sliver deals came out and they were able to really move them in a fast-moving market where there are a lot of day traders coming along. And we've seen the numbers on day traders swell in the last 2.5 weeks tremendously. So your brethren are starting to come out of the woodwork. Were you wanting more about what they did, or?
Well, I was just wondering if they're so successful. I was just wondering if you'll see other companies come along and take some market share from them.
Although they're pretty good at what they do, and it's a fairly niche market. It's not like everybody's doing data visualization. There's 10 more companies coming out of the line. Their competition's already out there. I think they're the ones coming on board probably rather late to the party, but they have some stuff that no one else does. So it's a decent company. So I can't say that it's it's like Groupon where 20 people are going to come into the same business and just run it out of business eventually one day, or like Netflix. There's just so few barriers to entry that everybody and their dog can do it, which always worries me about a company like that. They have something that can't be duplicated easily. They have a kind of a neat product. Can more of the other companies out there like Oracle and some of these other companies start building these products into what they do and eventually get margined out? Yeah, but I don't know, for the next 2-5 years, probably not a bad business model. But, only reason we're talking about them is that they dropped out 5 million shares until probably 10 or 15 million shares, which is probably what they should have made available at the IPO. But if you want to get the stock price up very early on, and you're somebody that's basically pushing the stock out, an underwriter, you want to be the first rat to the cheese at 6 months and get out with a bunch of money. And they're basically going to probably keep this thing up, much like some of the other companies that have come out, until they can push a lot of that stock out. It'll pull back a little bit, maybe 50%. Maybe it'll get back to the IPO price. And then I think as an investor, you'd be looking at it. And, of course, you could probably trade it for the next 4 months. I would suspect, though, in the last 2 months before the lockup, this thing is going to follow a pretty predictable pattern out here. We've seen some of these companies do exactly that. Trying to think. Let's look at MCP. Probably a very good example of these companies coming on, offering not a whole lot of shares early on and rocketing up. Let me see if we got it. Yeah, that's pretty much it. Have you followed MCP before?
I have looked at it. I never have. Well, I think I've traded it, once or twice maybe.
Well, it's probably a good example of how a lot of these stocks with small floats work. This thing came out at about $14. I liked it for a variety of reasons, and then later on got real nervous on it when the CEO was running around to every location hawking his stock just about the time that the rollouts were starting to come out. So that was my first warning signal in this thing. Of course, him almost getting thrown in jail didn't help, and why this thing is right back down here. So the big things to watch in data or any company that's gone public is watch the CEO. Is he more of a carnival barker, or is he actually somebody that looks like he's in it for the long term? And I would say this was probably not a flaky, Data is not as a flaky company as Molycorp so far. But, you see this thing get in 3 or 4 months, and then the CEO acting batshit. Oops, did I say something? I almost said it. Acting a little bit crazy, then start watching out for it. But a decent company, you're going to see probably that stock drop fairly significantly after 6 months, and it's probably not going to be all at once. It looks like they have fairly decent controls. The underwriters, well, I think they've got 2-3 million shares, so they're going to want to get out of this thing as soon as they can. But it's their job to keep this thing up for the next the next 6 months and get out of it with the most amount of money they can. And then we're probably going to see a lot more of those shares come onto the market. And then there's probably going to be at least some level of fair market value on this thing. But just remember, it is an IPO, and that lockup does come out in 6 months.
Okay, that's good to know. I was just kind of wondering it. It's come off its high today, so.
Yeah. I mean, is it worth $56? They priced it at less than half that, so they didn't think it was. At least you would think that, right? but that's not exactly what it is. A lot of these stocks are designed to do this, to get a lot of fanfare, to get the traders going in it, to keep the action going on it, so that there's a market to sell into it when the 6 months is over. So the idea is to keep these things moving, keep them on investors' radar, have them bounce up and down. You've got to advertise the stock, and the best way to advertise it, especially for day traders, is to have lots of action. And so when you see stocks like Molycorp, or you see big movements in that, just remember that a lot of times it is the big invisible hands behind these things really trying to keep them moving to advertise it to the marketplace and gain mind share. Because when that 6 months is up, they're going to want to push, another 40 million shares of paper out there on folks. And is it always bad? No. Is it usually bad? The answer is yes.
Okay. So you wouldn't mind messing with it for like 4 or 5 months or something like that.
I normally start seeing these things get weak at about 4 months, 4.5 months. Then you start seeing the realization that those can come. And of course, you always have to worry about a secondary or a shelf offering. And like I said, I couldn't even find the finalized documents for this, which made me a little bit nervous. I might have been thinking about using it for a day play or a day trade, but I couldn't find it. Not that that is uncommon. It would have made me feel a little bit better if I would have found the final documents that this thing went public on.
Are you going to continue to look for them?
Yeah. They'll float around. If you want to pay some money for them, you certainly can get them. The ones I saw were the ones from the week before, and as far as I can tell, nothing really changed much. But that I couldn't find the final documents and look through them is something that always I want to do before I spend any money on an IPO. But there's some that are very well known. I mean, X1 is a good one out here. So let's take a look at that one as a recent IPO. I've been talking about this one for a little while.
Yeah, the 3D printer, right?
Right, 3D printer, $10 million in sales. Not a lot there. Same thing. You need to watch these things. Of course, this thing had some huge moves off their first earnings cycle, and it's going to probably come back a little bit. But the stock market has changed. In 1999 or 2000, you didn't live here in Tampa, but in Tampa there was a church over on the main drag in downtown Tampa that had about 1,000 or 1,200 people showing up on a night for day traders. I mean, this was the height. This was the height of it. Now I think they got 50 or 40 or 50 people or something, but there would be 1,000 or 1,200 people. They had the biggest speakers in America that would show up, and I'd go down there and talk to all the day traders and stuff. It used to be absolutely monstrous. And we are getting that back, and you're going to see, I suspect, volatility pick up fairly strongly as we're finally, what has it been, 2000 since, there's still day traders, but not in the volume that there used to be. I think we're probably at a level that's maybe 10% of what it was in 2000. And I think we've just really in the last 2 weeks started to see articles that Ameritrade, some of these other companies, saying that they are starting to see these new accounts start to pick up. So a lot of people are starting to think that they can get back into the casino business. And certainly stocks like X1 and some of these other IPOs that have just taken off are going to get those people back in. One of the biggest features that Cisco had for its routers was blacklisting all the financial sites, so the programmers would quit playing stocks and get back to programming. That was in 2000. I had all these guys setting up and buying Sprint wireless cards so that they could trade from their software programming gigs down here in town and get past the firewalls of the companies they were working for. So.
I think you're seeing more day trading because people are getting nervous with this market up here.
I don't know if they're getting so much as nervous as intrigued. And like I said, you have to advertise a bull market, and everybody thinks that this is This is it. But this is when you start seeing a lot of really kind of wacky things going on in the markets, and stocks moving monstrously, like we've seen in Netflix, some of these other stocks that can you really say that Netflix was worth $50 6 months ago and $240 today? I don't know which one is worse. Was it way too low back then, or is it way too high back here? What we do know is that these kind of moves and appreciations on stocks, especially stocks like Netflix that won't let you see all their books, makes me extremely nervous, because that's exactly what 2000 was all about. And then, of course, it took 2-3 years before we actually got a market you could hang your hat on and really start trading again. So the downside is, or the good side is, you can make a lot of quick money in these markets. The downside is that normally the damage left after it means poor trading for a while after it. So to me, I would love to see a decent market pullback here. Let the market cool off. Let all these fast money guys kind of get a taste of regular trading. Then maybe we'll have kind of a better market out here.
What are you looking for a market pullback? 3 to 5%? Like that?
Right now, we could, in 2 days, I suspect we could be at 1575 at any minute.
Really?
Yeah. This is the kind of markets exactly. You really need to be looking at stocks like any of the high-tech stocks around 2000, and just a few days after 2000. Qualcomm, just look at Qualcomm out there going into January 3rd, 2000. And that, if you want to really learn about making money in a fast market with lots of day traders, that's the preeminent example of all those stocks. Unfortunately, probably 80% of them were IPOs, and 80% probably of those IPOs, 75% of them were gone in a year or two. Most of them were not well thought out of. Of course, Pets.com was the poster child for the phony IPO that had no real business model. It had a sock puppet, had a few ads in Super Bowl, and went out there and it was worth enormous amounts of money, and had never made a dime. Yeah, I think they got bought up for $20 million by PetSmart or something like that when it was all over. But nothing but a house of cards. And that's really when you need to work, and especially you want to know about companies that have almost no sales and companies that truly have sales, real products and customers, and know what you're in it already. Because these things will, if this is the second coming of the dot-com bubble out here, or at least in a lot of these tech companies where we see huge moves, be very, very careful. These things will get extremely violent, both up and down. Thanks for the call.
Okay, thanks, Dave.
You bet.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, finally got data running up here again. S&P's flat. We've got 2.5 billion shares in the consolidated New York Stock Exchange tape, which is for 3 o'clock Eastern time, or 6 minutes. Not a big day out here for a flat day. Today is options expiration. Not uncommon to see a lot of up and down during the day, and probably the real direction of the market starting yet again tomorrow. So right now, don't get too excited about too much. But, I've been talking about some of these companies and what I think is froth in the market. Does that mean that we're not going to go off into a .com bubble yet again? A lot of easy money out here, and it is becoming problematic. No matter how much money you say you're going to make less, when you have people come running back into a stock like IBM, IBM comes out with earnings, says we're going to earn less, going to continue to be an issue. What do? It sells off for one day. Everybody has to buy it right back again. These kind of beliefs that market prices or values are radically different from one day to the next just does not make sense. Certainly doesn't follow market logic. There's a great book out there called The Madness of Crowds, and I suspect we are very close to going full insane like the .com bubble. So watch these markets very closely. But just some of the other ones we have, like Tesla out here, TSLA. The idea that you're now spending money, and Tesla makes 20,000 cars. They would be still the highest priced car company at its price today if they were making 230,000 cars a year. So they've already discounted, or people are already discounting 10 times growth into this company. And the question is, what makes you think that they're going to sell a $75,000 car and basically go 10 times? So let's say they start making various models. How is that going to impact them? What are they? What's going to cost them when they go to dealers? They don't keep all the money. Not a lot of questions being answered. A lot of ridiculous assumptions being pushed out there. Maybe they've got a battery hidden that I'm the only one that doesn't know about, and they've left lots of other traders out there in on, but I suspect that's not true. We are in the midst of wild valuations for anybody in the technology sector, and to me, it is a great warning sign. So yes, if you're going to day trade these things, no problem. If you're thinking about holding them for weeks or months, just be very aware. These can get extremely ugly, extremely quick when reality sets back in. And, this is just a few of these newer upstarting companies that are having wild valuations that probably are unsustainable over the longer term. Let's see if there's anything else out here that I wanted to look at in the list before the end of the day. Got about 30 seconds. AVP maybe. I think maybe that was one I was looking at. Avon Products. The whole idea, this thing's probably coming back up. Yeah. Another one that's getting back up to what should be a fairly strong resistance levels. AVP, Avon Products, last major high, basically had 110 million shares back April 13th, 2012. We're getting into it with 30 million shares on May 3rd, 2.5 million shares today. So keep an eye on that one too. We'll see you tomorrow. Same bat channel, same bat time.